Predictions of huge house price falls. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because I want to have a look at this article from news.com.au predicting or warning of huge house price falls, everyone. Seems to be that time of year again where they're starting to trot out these stories. Because remember, we've seen them all before. You've got banks or like the RBA will do scenario tests, and they'll have the low or high risk, low risk, and most opportunistic or hopeful or the best option. And the media will always, you'll jump on the worst because, well, it's the scariest. It gets us all interested. Housing affordability is a huge issue here in Australia, guys. It's a real big issue. And let's jump in and have a look at this. So house prices to fall in Sydney, the Commonwealth Bank predicts. Now, we're going to bring up house prices, asking prices in Sydney right now. Let's refresh this. And we'll see. There you go. All houses 1.7, 3-bedders 1.6. $1 million, everyone. So, yeah, we're not looking too good with our affordability. House prices have risen sharply in the past 12 months, but it could be the beginning of the end for Australia's property boom, the beginning of the end. Commonwealth Bank is predicting overheated house prices will plunge in Sydney and across Australia. The median house price in the harbour city has spiked 23% in the past year, but could drop nearly $200,000 by the end of 2023. Analysis by the Commonwealth Bank shows. Okay, so 200 grand it could drop. It doesn't mean it's going to be any more affordable. Okay, let's bring up this chart here. Housing affordability. First home buyers affordability. Hang on, let me just overlay this. This is an interesting chart. This isn't housing affordability. This is showing wage growth from 1990 to November 2020. Male and female, you're lucky if you're getting 350%. Now keep that in mind. Remember that number. Because we have a look here. This is showing you accessibility to affordable property, median affordability. And this is out of date now, so ignore it. But it's showing you that depending on your income bracket where you are, how much of the housing market is affordable to you. Okay, now remember that 355% we saw in wage growth? Have a look here at property. This is why you buy property here in Australia, it makes more money than you do. It's kind of frustrating, particularly when you run a business. But we can see here, Sydney up 565%. And what's the lowest? Poor old Darwin only up 336%. So there you go, Darwin, they've only gone up from 110,000 for a house in 1990. Wow. 88,000 in Hope, 88 grand for a house in 1990. And so remember, this is from September 2020. It's gone up since then. So even if we got back to these prices, a decrease to these prices, they're still going to be bloody insane. Okay? This is how it's happening all around the world. And this is your percent of weekly earnings. So housing stress, and I'm referring to this more and more. Let me bring this up just for those of you that haven't seen this quote of what housing stress is. Describes lower income households that spend about 30% of their gross income on housing costs. Now that's a mortgage or that's rent. So you'll see mortgage stress we're talking about is going down. Less people are under mortgage stress because, well, interest rates have gone to nothing. It's not surprising that that's gone down. But rental stress is going up because more people are under rental stress because rents are going up. This is showing you how much of a weekly earnings of an individual, the average earnings, you need to service a mortgage. And it's a joke. No, you can't have one person servicing a mortgage in Australia anymore on an average lower income or just median income job. You need a couple. And even then, New South Wales is approaching the definition of mortgage stress, everyone. So with that in mind, and this is my bugbear, it's resulting in declining economic complexity. Our country's just becoming obsessed with housing. Why get a job when your house is going to grow more in value? So even if we have this big fall they're talking about, it's It's not going to be the big crash everyone wants. It's not going to be all these people who are waiting on the sidelines to try and time the market or jump in the market to get in. It's just going to mean we're going back to 2020 prices, or maybe even a little bit further back. It's still going to suck. So the bank's dwelling price projections predict the median house price across Australia will drop by 8% in 2023. This includes a 3% drop this year and a 9% fall next year in both Melbourne and Sydney. That means the median house price could plunge from 1.4 million in Sydney to 1.2, so 196,000. So you could lose 200 grand. So okay, I mean that's great. Your deposit requirements would go down, but $1.2 million, because you're anchored at a 1.4 price, or even the SQM data we were looking at, which is just for Sydney, which is even higher. This seems like a bargain. Remember when I'm earning $1 million over a lifetime was just not normal? In Melbourne, prices could fall from 998,000 to 880,000. That's still really expensive, everyone. Australia is now a society where you need a couple to both work together to own a house. And this is the type of houses they're looking at. We're not talking nice, luxurious houses. You don't want to go down the path of comparing Australian housing to other countries. It's really depressing. It really is. RateCity.com.au research director Sally Tyndall said prices in Australia's two biggest cities were beginning to falter amid buyer fears of purchasing at the peak, higher fixed rates, and stricter serviceability tests. This could be the beginning of the end for the current property price peak in Australia's two biggest cities, she said. Well, yeah, it could be. I wouldn't be surprised if we start to see a cooling off in Melbourne and Sydney, if we've reached a peak and it dips, goes down a bit and flat lines. But then, where's everyone going to go? They're going to come to Brisbane. They're going to go to Adelaide. They're going to go to other cities. Ms. Tyndall acknowledged that falling property prices can be stressful for any buyers who've bought at the peak, but it would be an exciting opportunity for aspiring homeowners. Yeah, it would be. There's demand for property here in Australia, guys. There's always going to be. It's a cultural phenomenon. It's part of our psyche. It's the state religion in Australia. Property price drops will provide a reprieve for people hoping to get into one of Australia's many overheated property markets. However, would-be first-home buyers should crunch the numbers before they pop the champagne, she said. If property prices fall on the back of rising rates, buyers may not need to stump up as much for a deposit. They will, however, need to make higher monthly repayments, which means they won't be able to borrow as much from the bank. So this will exacerbate the situation. This is where I think property will stall. You'll see a fall and then a flat line. How long could that last? Is property going to be the magic investment that everyone said? All these gurus that are selling their courses and their schemes and their methods, where they're simply leveraging one property into another, they've been living during good times for the last 30 years. We've had our first recession now. There's been government stimulus of the housing sector every time anything even goes wrong. The precedent's been set. First home buyers should think carefully about overextending themselves in a market where rates are set to rise and prices are forecast to fall. Make sure you have a buffer to ride out any bumps. This is good advice. You've got to do your own. You've got to do your own scenarios. You've got to check what's going on. You've got to anticipate rates are going to go up. And I mean, that's what it comes down to. It's an individual decision. You've got to be careful with all of these predictions and the media influencing you too much, because you could miss an opportunity. And it comes down to your lifestyle, how you want to live. I just saw in the comments, I hearted a comment from someone where they'd pretty much sold up, put it all into dividend-paying stocks, and they're just popping around, living in different parts of the world. That seems awesome. You want to live your life how you want to live it. So CoreLogic's Home Value Index released last Tuesday found the Sydney property prices had dropped by 0.1%. Yeah, I mean, this is a joke. People are predicting a peak from 0.1%. I don't know how you could... I don't know. I mean, maybe. But here's the thing. You're trying to time the market, which is very difficult. If people could easily time the market, they'd all be, financial gurus. While minor, it was a meaningful development in a city where house prices jumped by 23% in the last 12 months. Well, it showed you it's just gone crazy because that 23% increase was off a fall too. CoreLogic has attributed the drop to the huge price gains that happened last year. Housing affordability has been eroded by the high rate of growth in dwelling values alongside low-income growth, the research group reported. Not only does worsening affordability restrict access to the housing market, especially first home buyers, it also erodes housing sentiment. Last month, the Commonwealth of Australia drastically changed its property outlook, and I'm assuming the Commonwealth Bank, over because they literally copy and pasted this from another thing they wrote, over concerns that interest rates could rise as early as June this year. CBA Chief Executive Mr. Matt Coleman said his bank expected slower property growth of 4 to 7% this year. Most of the decline will begin in the later half of 2020. So we're seeing a cooling market. Let's have a talk about this. Grab your Stein, everyone. What do you reckon? What do you think? We've heard a lot of this before about these property prices decreasing and predictions of property going down. Now, even if Sydney takes a hit, like they're saying, it's still going to be difficult for a lot of people to get in. And in some ways, if they're tougher on lending to people, if the repayments are going to be higher, is it going to be harder for some people to get in? You know, we've got some systematic issues with regards to housing in Australia. It's bigger than just, monthly predictions from the banks. We need to change our approach to housing. Then it needs to be less of government intervention in the sector. We need to open up more land for development. We need to make it easier for people to build. We need to not have increased government burdens on it. You've got Victoria adding a new development tax. All of that flows through to the people who are buying. We've got another video coming out today where housing affordability is going to be a major election issue. And one suggestion I would put to make housing more affordable is simply increase the tax-free threshold. That means every single person who's under housing stress, that'll disappear in an instant because their wages instantly go up. No one ever recommends that. I mean, this is coming from a media release of a social housing organization, so they've got a political agenda they're pushing. What about, where's the political agenda for more individual freedom and responsibility on your lives? Doesn't seem to be popular in Australia. So what do you reckon, guys? Do you think we'll see these drastic property falls? And even if we do you think it'll make any difference to the average punter trying to get in a property? What do you reckon? Let me know your thoughts and opinions on this one in the comments down below. Thank you for watching. Like, share, and subscribe to the channel to help us for the algorithm. If you're a fan and enjoy the content I create here, there are a few ways you can help out. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, guys. And check out this video discussing global food shortages. I don't think we'll see shortages here in Australia. I think prices will go up. They already have. But there's some countries that are going to be affected by these surging commodity costs. Take care, guys. Have a great day. See you in the next episode. Bye for now.